Was Mr. Greenspan himself being a little irrationally exuberant in his commentary yesterday, or are we indeed looking at bubbles?
So when he first coined that phrase in 1996, the market fell for a couple days and then continued to rally for 3.5 years. In the short term, we feel like there has been a lot of exuberance. It's not necessarily irrational because, as you showed earlier, earnings estimates have really melted up along with stock prices over the last months, completely driven by taxes and the expectation that growth may be even stronger than we think. But it is a time to pause because we are now at the most historically overbought level for the market as a whole in 30 years. However, the long-term picture remains positive to us.
Right, we had that little wobble at the end of January. It is now February, a new month. Indices are teasing us today. They're going nowhere. They're not giving us any hint. But you point out that historically, February is a weak month. If we were to look at history, though, we might get very scared here. Should we be looking at history, or might this February break all of the historical traditions?
Well, there's that old saying that if you ignore the lessons of the past, you're doomed to repeat them. So from that perspective, given, again, this historically overbought situation, we want to be mindful that, nothing is a straight line higher. And so for us, it's time to sort of rethink things, particularly the stocks and the sectors. Consumer discretionary really stands out for us, where there have been tremendous runs, and maybe pull in the reins and look for better places to get more aggressive.